Good evening and welcome to another episode of Night Markets, where each week I'll be giving you my perspective on what's driving markets, as well as my point of view as a family office professional. My name is Jacobus Brink, Chief Investment Officer and Head of Investment Research for South Africa at SFO. In what was a very light trading week leading up to the Labor Day weekend, the major indices closed fairly mixed. The Nasdaq Composite was the weakest performer, primarily due to a nearly 10% drop in Nvidia's share price, which wiped out approximately $300 billion in market value by Thursday's close. Meanwhile, value stocks outpaced their growth counterparts by the largest margins since late July. So before we jump into macro and markets, let's just look at the current situation in the Middle East. Over the weekend, the Israeli forces clashed with Palestinian fighters in the occupied West Bank. This conflict included one of the most significant military operations in recent months, aimed at preventing attacks from Iranian-backed militant groups. The situation has raised international calls for a ceasefire, but Prime Minister Netanyahu has vowed to continue operations, particularly in response to the killing of 6 hostages by Hamas in Gaza. So while the conflict is ongoing and there is very much still uncertainty around ceasefire negotiations, it currently hasn't had real direct impact on global financial markets, as oil and gold have both traded fairly steady on Monday morning. However, it remains a geopolitical risk to monitor. And then looking at markets and macro, starting in the Americas, the economic data from the US showed a fairly mixed picture. The core personal consumption expenditure price index, the Federal Reserve's preferred measure of inflation, increased by 0.2% in July, aligning with expectations. However, the annual rise was slightly above expectations at 2.6%. This was seen as a positive sign by investors, calming inflation concerns and boosting the Nasdaq futures. US consumer resilience was also highlighted by a 0.3% rise in personal incomes for July, which was slightly above June's increase. However, spending grew even faster at 0.5%. This strong consumer activity led the Commerce Department to revise its estimate of second quarter GDP growth from 2.8% to 3%. Despite the positive data, the housing sector remains a weak spot. Pending home sales dropped by 5.5% in July, the lowest level we've seen since 2001. This decline is attributed to affordability challenges, uncertainty surrounding the US presidential election, and buyers waiting for potential lower mortgage rates. And then looking at the market performances, the Dow Jones Industrial Average closed higher by 1.06%, driven mostly by value stocks, while the Nasdaq dropped 0.78%, as mentioned previously, impacted by Nvidia's disappointing earnings. And then moving across the pond to the Eurozone and the UK, Eurozone annual inflation decreased to 2.2% in August. This is the lowest number that we've seen in 3 years and just above the European Central Bank's 2% target. The drop was largely due to a decrease in energy costs. Core inflation, excluding food and energy, also fell slightly. However, inflation in services, which is a key metric for the ECB, increased, indicating persistent price pressures in this sector. Economic sentiment in the Eurozone also improved, with the economic sentiment indicator rising to 96.6, the highest in over a year. However, Germany's business climate index dropped more than expected, reflecting growing pessimism about the country's economic outlook. In the UK, mortgage approvals rose to the highest level since September 2022, indicating a stronger housing market. And looking at the market performances across the region, the Pan-European Stocks Europe 600 index gained 1.34%, with the major indices in Germany, Italy, and France also closing higher. Then moving further east to the Asia-Pacific region, Japanese stocks ended the week higher, with the Nikkei 225 up 0.7%, recovering all of the losses from earlier in the month. The market's recovery was supported by improved investor sentiment, despite concerns over US growth and the Bank of Japan's recent interest rate hike. Japan's inflation data also showed an increase in the Tokyo area core consumer price index to 2.4% year over year in August, which was higher than expected. This has reinforced the Bank of Japan's stance on normalizing monetary policy indicating that the possibility of further rate hikes if economic conditions continue to improve. In China, disappointing corporate earnings reports and downgraded growth forecasts have dampened market sentiment. Economists have lowered expectations for retail sales as well as fixed asset investment, with concerns rising that China may miss its official growth target of around 5% this year. This has increased expectations from the market for further economic stimulus from the central bank. And in markets, the Shanghai Composite Index fell by 0.43%, while the Hong Kong Hang Seng Index gained 2.14%. And then moving back home, South Africa saw a decrease in producer price inflation for July, down to 4.2% from 4.6% in June. Producer prices tend to lead their consumer price counterparts, so this could be a good thing for inflation going forward. And indeed, this has followed a similar decline in consumer price inflation, bringing inflation closer to the midpoint of the Reserve Bank's 3 to 6% target range. Looking at the markets, the all-share index dropped by 0.71% due to a significant pullback in the resources sector. However, the rand strengthened, reaching a 13-month high on Friday, buoyed by optimism about South Africa's economic outlook and expectations of the US Federal Reserve's interest rate cut. And then just looking at the week ahead, the upcoming week is expected to be relatively quiet, with US markets closed on Monday for Labor Day. Key economic data to watch includes the US and China PMIs, as well as the monthly US jobs report, which will be crucial for assessing economic health in the world's largest economy. Locally, South Africa's GDP numbers will be released on Tuesday, providing further insight into the country's economic performance. And then, as always, we'd like to end off the episode with an interesting investment idea we discussed during the week. This week, we spoke about gold. Gold prices have surged to a 6-month high, driven by its safe haven appeal amidst geopolitical uncertainties and a weakening US dollar. Conversely, oil prices have dropped below $80 per barrel due to easing tensions in the Middle East and concerns about a potential global economic slowdown. On balance, gold has a pretty reliable record as a safe haven asset in times of market turmoil, and it can also provide significant diversification benefit as its correlation with traditional investments like stocks and bonds is typically very low. For these reasons, we always like to keep a strategic allocation to gold in most of our client portfolios. Thank you for joining me for another episode of Night Markets. Financial markets close at 5 p.m. Night Markets open at 6 p.m. Let's start the conversation.